Hi everyone, welcome to this week's weekly market report by J2wealth. This week, the market had a negative impact where Nifty 50 fell from 24,854 points down to 24,180 points, down by 2.71%, whereas Sensex fell from 81,224 points to 79,402 points, down by 2.24%. Moving into world market news, China cut one-year loan prime rate by 25 basis points to 3.1% from 3.35%, while the 5-year loan prime rate was cut by the same margin to 3.6% from 3.85% previously. IMF sees global inflation declining, downgrades China growth to 4.8%. The IMF said in its latest economic outlook for Europe that an aging workforce and low productivity growth would reduce the continent's annual GDP growth rate for the next 10 years until 2029 to just 1.45%. In the US, the average growth rate over the same period is estimated to be 2.29%. US existing home sales descended 1% in September to a seasonally adjusted annual rate of 3.84 million. Sales dipped 3.5% from 1 year ago. Crude oil prices are expected to fluctuate in the coming years, with a potential rise to $80 per barrel in the last quarter of 2024, before dipping to a low $60 by the end of 2025, according to a report by JP Morgan. Silver hits rupees 1 lakh mark amid surge in demand. Gold reaches an all-time high of rupees 81,000. Moving into Indian market news. In October 2024, the HSBC India Composite PMI edged up to 58.6, whereas manufacturing PMI rose to 57.4 and the services PMI edged up higher to 57.9. Rupee remained flat and settled at 84.08 against the US dollar due to overflow of FIIs in the Indian equity market. Union Minister for Civil Aviation announced that the government plans to establish 50 additional airports within the next 5 years. The NSE's Nifty 50 and BSE's Sensex closed at over a 2-month low for third consecutive session. Benchmark indices for the mid and small cap stocks outpaced this decline, with the small cap index falling the most. Nifty Small Cap 250 index fell 10% from its peak on September 25th, and Nifty Mid Cap 150 fell 9.5% from its highs. Though a bounce in the markets is overdue, it needs reversal of selling pressure from foreign portfolio investors and some sentiment stability in the local investor community. Nifty could now take support from 23,892 points. Moving into stocks in news. HDFC Bank Q2 PAT rises 5% year-on-year to Rs 16,821 crore, beating street estimates. ITC Q2 net profit rises 3% to Rs 5,078 crores and revenue up 17%. Indigo Q2 results, airline slips back into red with Rs 987 crore loss. Nvidia to supply chips to Reliance and other Indian companies in its AI push. IndusInd Bank reported a 39.5% year-on-year drop in Q2 FY25 net profit to Rs 1,331 crores due to stress in microfinance, which led to higher provisions, lower asset quality, and narrowing lending margins. PNB Housing Finance reported a near 23% year-on-year rise in Q2 FY25 profits to Rs 470 crores, helped by a strong demand for home loans. Swiggy is internally aiming for a company valuation of $12.5 billion to $13.5 billion for its upcoming IPO, cutting its target by 10 to 16% due to market volatility. RBI approves Axis Bank's reappointment of Amitabh Chaudhry as the Managing Director and CEO of the bank. The 2024 presidential election is just around the corner, as the world's largest economy with unparalleled influence over global trade. US presidential elections are not just significant political events, they substantially impact the stock market. Historically, the US presidential cycle have shown varying effects on market performance. A change in power in the White House has often led to a market low within 2 years over the last 8 decades there. US elections carry broad implications for global bond markets, influencing inflation expectations, monetary policy, geopolitical risk, and the global trade outlook. The interaction between fiscal policy uncertainty, potential shifts in the Federal Reserve's response to differing fiscal directions, and changes in the global trade environment are poised to introduce volatility in fixed income investments. That's all for this week's market report. See you again in the next week. Please make sure to like, share, and subscribe to our channel.